Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M1M, as you know, is the first virtual accelerator in the world, global virtual accelerator. We run this out of Silicon Valley, but with a global footprint. And our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we do these free mentoring roundtables week after week after week. This is the 373rd session. And it is largely a working session where entrepreneurs from all around the world pitch and we dialogue on their strategy. So that's what we're going to do soon. Let me do a little bit of housekeeping here. The event is being recorded. You will have a recording available on our YouTube channel with all prior recordings of earlier roundtables. And then we do have also, so the roundtables, YouTube roundtable channel is 1M1M Roundtables. And on Twitter, we're at 1Mby1M, and at Sramana, we publish a tremendous amount of content there as well. You're welcome to follow us if you're not already. And if you're live tweeting the show today, please use hashtag 1M1M. These are call-in instructions. We are not quite ready for call-in yet. I will put this slide back up later. But we do want you to participate and participate extensively. So you can participate by calling in. You can participate by using the public chat. All through the session, the public chat is available to you to comment, ask questions, etc. Make sure you turn your chat to send to all participants, not to me privately or to Maureen, the host, and so forth. If you want to participate in the conversation, I recommend that you do send a chat in the public chat, send to all participants. All right, so we are going to start actually today with the entrepreneur pitch session. Let me set some expectations. This is a working session. We are completely on your side, and the only reason we do this is to help you move the needle forward a little bit. And we have no other agenda for being here or, for creating this forum for you to come and pitch. It is possible that you may disagree with my feedback, and that's perfectly okay. At the end of the day, it's your venture. You are going to decide on what strategy you're going to follow. One thing, however, is non-negotiable because of how the industry operates. Not all businesses can raise money. Not all businesses should raise money, and raising money doesn't guarantee success. So you have to understand what kinds of businesses raise money, what kind of businesses are fundable, and what are investors looking for at a fairly great amount of detail, and then from there on define your strategy of how to move forward. We have a lot of experience in doing this, so that's the perspective that we offer you here as well as in the 1M1M program at large. Okay, we're going to start today's session with David Kreinces. I don't know if I pronounced your last name right, David. Forgive me if I haven't, but...
No, that was good, Sramana. Thank you.
All right. Okay, well, let's hear what you have to say, what you're doing, and let's get going.
Well, thank you, Sramana, Maureen, and the 1 million by 1 million roundtable for having me. Again, my name is David Kreinces. I'm the founder and portfolio manager for ETF PM, a revolutionary financial advisor based in Los Angeles, specializing in leading ETF strategies. And on slide 2, our passion for our client value proposition is smart investing made simple. On slide 3, you'll see that our target customer is really everyone. We are building a next-generation vanguard investment platform, and investors from existing individual investors to corporations, RIAs, institutions are all target customers. On slide 4, the pain we identify for our clients and all investors is first, investment comfort. And of course, investors need strong performance, strict risk control, and whenever possible, maximum efficiency and simplicity. On slide 5, we address investor pains through using leading investment instruments from the largest investment firms in the world, leading exchange-traded funds. Point number 2 for performance, in recent years, the industry-wide trailing 10-year annualized return range for diversified portfolios, we're really in the 6 to 9% neighborhood, and it's only through the advent of a few new technologies over the past decade that have allowed the upside of that range to extend well north of 20%. So understanding these new technologies are really priceless for all investors, even the smallest investors. And that's something that we're bringing to the market as efficiently as possible. And then third, from a risk control perspective, our specialization, which is one of the leading specializations in the hedge fund industry, uses algorithmic, rules-based processes to respond to market volatility without human emotion. And it's been successful in delivering gains in recent market crashes, and we were effective in delivering gains for our clients in the recent crash of 2008. And then all of this is pretty much wrapped up in a very efficient website, investablebenchmarks.com, where we basically own the term from an SEO perspective. It's very hard for a small investment firm to compete with the incumbents, but this is a very important term that we can use in our marketing and communication. All investors need an investable benchmark to see if they're getting value, and this is an extremely efficient way for us to show all investors an important starting point for their diversification. And then on the next slide, we discuss the customer acquisition programs. We have referral programs. We have a range of direct prospecting efforts. We have done social media marketing, and we have plans for a very interesting commercial program that could be a viral marketing opportunity. And we have distribution partners which are actually coming to us. We've had 2 new clients that are also pursuing additions to our management team that want to join us in building this platform. And we have 2 institutional hedge fund seeders, one that's already made an offer and one that's about to make an offer to help us distribute some of our more dynamic products. And then on slide 7.
Hedge funds distribute products?
Excuse me?
Hedge funds will distribute your products, your technology?
These would be basically marketers, and effectively they're fund-of-funds that allocate to absolute return strategies and effectively work as seeders in the industry of sorts.
So they will not market, they will recommend to the investors that they are investors in. If it's a fund of funds, they are invested in a bunch of hedge funds, and they're saying that they will recommend your product to these hedge funds.
Yes, and there's a range of these types of firms in the marketplace that have different networks of investor categories that could come in at an early stage for firms like ours. And then the customer validation. So most of our platform has really just been a proof of concept where we've been incubating innovative new algorithmic strategies. The focus has really been on product development and delivering strategies that can deliver gains in a crash and outperform indexing long term as well. So most of the past 10 years has really been excruciating product development, trial and error. Most recently, early last year, the engagement of some of these new technologies enabled us to radically increase the utility and efficiency of the whole platform, which is really what has turbocharged the interest in distribution partners. And the current structure, which is separately managed accounts, is one in which our clients basically have an account at a custodian like Charles Schwab, and we have the power to manage their accounts for them like a traditional advisor. But the assets that we're the working capital and product assets that we're working to raise from angel and seed investors would enable us to create ETFs of ETFs and hedge funds for these new strategies at a faster rate and market the platform in a more dynamic platform.
Okay.
So our questions for Sramana are, feedback on fundability, options we have with regard to our ask size, and any feedback and suggestions that you might offer.
So first and foremost, you have said nothing about what is your business model. How do you make money? What are you charging these customers for using your technology?
Our platform gives investors the efficient ability to utilize our platform at the lowest cost, like a robo-advisor, where they just pay a 0.25% for us to do their indexing with annual rebalancing. And then we have 2 different levels of principal protection and tactical rotation that would increase their fee structure up to the 1 to 2% range, but on average, our client base today is paying us about 90 basis points, but in the pooled funds that we're working to launch, the first ETF of ETF would have about a 62 basis point management fee. The underlying ETFs have a total expense ratio of 1%. So at a 1.6% total expense ratio, the ETF that we're first working to bring to market would basically bring the world's leading hedge fund strategies to the mass market at 160 basis points in an ETF structure.
Okay, so it's basically a fund manager kind of business model.
It's a next generation Vanguard that is bringing leading attributes from Vanguard. Okay.
Got it. And these validations that you've done, these 35 households are paying that kind of fees to you?
Correct.
And are any financial managers, fund managers already as your customers?
Well, the 2 hedge fund feeders that would be the most sophisticated institutional investors beginning to potentially participate have explicit interest in helping us scale the combination of these strategies that we're discussing.
No, but do you have any, these other categories, you have individual investors validated. What are the other, what is the situation with validation with the other categories?
Well, some of our clients are business owners in a corporation or LP structure. As far as other RIAs, these institutional investors that are hedge fund seeders are effectively institutional RIAs. So the interest that we're getting across the board pretty much covers all of these buckets.
Okay. And what about, so institutional investors are part of the interest pool that you've created?
Correct.
And why haven't they bought yet? You've been in business for 10 years, so why haven't they bought yet?
Well, they have. On InvestableBenchmarks.com, we show strategic indexing solutions, including the prescription from Warren Buffett and David Swensen, 2 of the industry's leading professional investors who prescribe ETF portfolios in print where they've communicated their prescription. Prior to early last year, the solutions we were offering were in that same neighborhood, the same 6 to 9% neighborhood. The new technologies that have emerged that have increased this range significantly include leveraged ETFs, which are very badly misunderstood industry-wide, and second, the importance of the long-term treasury instrument when combined with leveraged ETFs, which create basically a new chemical compound. When you think about investing, few investors appreciate the combination of securities can have attributes like the combination of chemicals, and you can't necessarily view the combination like you would the individual components. And when you combine these leveraged ETFs with long-term treasuries, what you get are portfolios that are vastly superior to these unlevered solutions that we've been looking at prior. It's just that most investors aren't looking at these new products in the right way and in the right combination.
So let's stay focused on your questions. these 35 households where you have applied, is it the new technology or the old technology?
So they've been shifting over the course of the past year with great success.
And you have been able to show the kinds of returns that you're talking about in these 35 households?
Absolutely. So here's a very simple way to think of it. When you buy an investment portfolio for retirement, you're putting your money into basically a machine, a diversified investment program that you have a high confidence is going to give you a certain long-term return and risk. Now, you wouldn't put the money into a machine if you thought it was going to crash and not get you to your destination. So assuming that machine is designed with maximum safety, so you're not concerned about getting there faster, you want to get there the safest you possibly can. And now you're saying new technology in the industry is going to enable you to have 2 or 3 of those machines instead of just one. So historically, you would have looked at just having one and said, I can't stomach 2 or 3 of these because I could barely stomach the ride in one. But if you change the machine to give you the smoothest ride possible.
The issue here is that you are going to have to convince people to accept that your machine is superior.
Well,
this is why.
These are big data points. The world's leading hedge fund and the world's largest asset manager in BlackRock, the world's leading hedge fund is Bridgewater. This approach is what they're doing. So this isn't just us saying, hey, this is our new great idea. This is what the biggest investors in the industry are doing. We're simply bringing it to the masses at the lowest cost and most efficient manner first.
Right. So it sounds great. Question is, does it work?
And it
because
does.
No, you're telling me it does. That's not the point. The point that the question that you're getting in selling this and scaling this is that you have to show with pilots that it works. And the question of fundability rests on validation.
Right. So when you think about does something work, the beauty of portfolio management is you can look at the past 10 to 18 years. When you look at the past 10 to 18 years, you could say, hey, I want to watch this for another 3 years because I'm not sure if it works. But you could literally do the math on the past 18 years and see that it's worked so far better than anything else out there. Now, year to date, just to zone in on this
year. But your technology has not been around for 10 years. You're telling me, unless I've understood you wrong, you said that your technology is only available for the last 1 year.
However, the new technology is basically the leverage on the unlevered instruments. The unlevered instruments have been around.
No, I understand. Your concepts, you're saying that your concepts and the strategy that BlackRock has used and Bridgewater have used have been around for the last 10 years, and you're taking that approach and you're packaging that to be accessible for the, so in principle, it makes perfect sense to me. And I think the question of fundability is actually a very reasonable possibility that it's a yes. The question is which kind of investors do we need to go to? You are, as I don't know if you've listened to any of the previous interviews or any of our podcasts, I keep harping on this point that you have to understand that the early stage funding game has changed dramatically in the last 5 years, even 3 years. It has fragmented greatly. So when I was doing startups in the 90s, we were all through the late 90s, we were raising seed money and then Series A. Nowadays, it's pre-seed, seed, post-seed, pre-Series A, Series A. So there are 5 types of financing before you can get to institutional financing. And then there's, even in Series A, you have small Series A versus large Series A. So that the funds, there are 500 funds or more operating in this pool, and each of them have their sweet spots. So the question of fundability is, what are the metrics with which we are going out to raise money? Whose investment thesis do you align with? Those are the questions. That's why I'm trying to understand what is the level of validation we are going out to raise money with. So is it a pre-seed deal? Is it a post-seed deal? Is it a pre-Series A deal? Those are the questions. So in principle,
I was just going to say the beauty of launching an ETF or a hedge fund is that it requires very low working capital. The higher amount of capital that's needed is the seed assets in the product. Those assets are daily liquid. So the investor who is participating in the working capital and the seed assets really just has their working capital that's the material risk. So to launch either fund type, depending on how aggressively it's pursued, can be launched with $500,000 to $2 million in working capital per product. But the product then, and we have about half of what we need for either approach already, so we're really just looking for a gap strategic partner. But the assets in the product that would start at anywhere from 10 to 30 million, our plan would be to get those assets over 100 million within 6 to 24 months to prove to the institutional marketplace that this launch is a viable, scalable institutional product with a target of billions in AUM in a 5 to 10 year time.
You're thinking about this as an ETF. I'm giving you the perspective of a FinTech investment from the technology universe. So I don't operate I'm not a hedge fund. I have no experience in managing hedge funds or any of that, or Vanguard or any of that. The only thing I can give you perspective on is if we look at this as a FinTech company from the technology universe, these are the realities of our game.
Absolutely, and the FinTech applications here are endless because the automation of everything we're doing and the communication of this website to investors is entirely the FinTech side of the platform. I'm just addressing the portfolio management side of the platform because that's the incubation focus to get the first product in the market. But absolutely, it's a combined enchilada here, and there's no question that we need resources and expertise across this entire spectrum.
Right. So the question about fundability is it is fundable at some level, yes, I think. But the rest of it, I don't have enough information to advise you on.
Well, the ask size is basically, I was just saying, $500,000 to $2 million in working capital for launching our first pooled fund, in addition to AUM that contributes to the launch of the product. And we're about halfway there. We want to launch the product with at least 10 to 20 million in assets in the product and at least $500,000 in working capital to cover, pretty much gives us a clear path for operating expenses for the first 3 years. So that's our minimum ask, I think, just to give away as little equity as possible. But we could certainly, for the right strategic partner, give up as much as, 20 to 49% of the firm to help scale as quickly as we can. But ultimately,
for $500,000, you're going to give up 20 to 49% of the firm? That makes no sense.
No,
in our world, we think deals like that are absolute shit.
No, you misunderstood. The $500,000 in working capital and the 10 to 20 million in product assets is for 20% of the product. In terms of a strategic partner that would take half of the firm, that would be closer to a 3 to 5 million in working capital and 100 million in product assets.
Yeah, so I think at least from the way we do financing in the technology universe, these numbers are completely off. So your ask size, let's just stay focused on your ask size of $500,000. And $500,000 may or may not come with 20 to 30 million in assets. You have to see the way FinTech works is that you're basically selling technology and a value proposition, or a technology-enabled value proposition, which is what you're selling in this case, to customers. So your working capital investor is going to be taking a certain percentage of your company, and with that working capital, you're going to have to go acquire those customers and build up to that 20, 30 million in assets under management. And that's how
we could certainly give a lower equity component, have the working capital, and save the other equity component for a different distribution partner. So it's able to be sliced however the investor prefers to participate.
Yeah, but you don't have to give equity for distribution partners either, because if your product works and if it's delivering value, there is no, we don't necessarily give out equity as bribe to customers. That's not how technology is sold. Technology is sold on its own merit. So if you are offering a technology-enabled value proposition, the way we do it is we convince people of the value. We show the metrics that there is value and there is, real return on investment, and people pay real money, which is your percentage point on the funds under management. That's the equity is given to the investors who are going to fund you working capital-wise.
Well, when I was describing the equity participation for the distribution partners, the seed investors who are going to put in capital at pre-launch for a pooled fund often do, if they're the largest tenant in the building, they often do want some participation or some concession.
So that's the difference. Then you only go after, you can use that strategy, and I actually like that strategy. You can go after only investors, the investors from whom you're going to raise your working capital, which is, whether it's pre-seed or seed working capital, you're going to be working, you choose only people who also bring with them a certain amount of asset under management. So you get investors, you get customers, you sell them as customers, and you tell them that you can put in, we'll work with we'll manage this much money for you, and you can also invest in the company to this much, you can invest this much money in our company, and that's fine too. So that actually, in your case, that may be the best strategy of raising money, which means that your funds, working capital funds, are going to come exclusively from people who are fund managers, who are, whether it's wealth managers or, basically financial professionals of the kinds that you talked about earlier.
Absolutely. And we're really trying to target all of these approaches because, the scalability of what we're doing is extremely efficient, and it's really a first mover opportunity. So it's a function of finding investors who simply recognize the innovation and want to participate at any level that they're comfortable. But the
all right, David, I'm going to have to stop you because we've spent too much time on one business and we have other people that we need to work with. But you're doing something very interesting, and FinTech is very popular right now, and I think you can build a very credible, very reasonable company with what you're, what you have what you presented so far. So good luck.
Thank you very much. I appreciate being with you today. Thank you.
You're very welcome. Ganesh, you're up next.
Yes. Good morning.
Good morning.
My name is Ganesh Nallapareddy. I am from CricClubs. It's a highly scalable, innovative digital platform that is trying to bridge the gap between technology and cricket and other sports. So let's see what we are trying to solve. So before we get started, let's take a look about what cricket is and what its market is. So cricket is the second most popular sport in the world after soccer. There are more than 75 million players who play cricket across the world. And cricket has a huge fan base. There are 2.5 billion fans that follow cricket. And there are about 900,000 cricket leagues across the world that play cricket on a yearly basis. Just in USA itself, average league spends about $15,000 a year on their league needs. That accounts to $50 per player. So basically, the league spend on cricket balls, ground rentals, insurance, uniforms, umpire fee, scorer fee, and buy other equipment like bats, helmets, pads, and all. So we are trying to get all this revenue channeled through our platform. Next slide, please. So let's see what's the problem. So if you're organizing a cricket league, you need a league management solution where you can engage your fans, provide all the player statistics, record the games, and provide live coverage and all that. And also these national governing bodies who govern the cricket in different countries, it's getting very difficult for them to spot the talent which is out there somewhere in the smaller cities. And also it's very difficult for current generation youth to keep engaged. And also it's getting very difficult to buy affordable sports uniforms. And also it's very difficult situation now to buy a reliable sports insurance. So let's see what we are trying to solve here. So when a league registers with us, they will get a dedicated league portal where they can manage all their players, games, teams, schedules, along with their photos, articles, and all the sponsors information. So as the games go live, they can also score those games from the ground and everybody in the world can follow it live. Or they can also provide live streaming through YouTube or Facebook, and we provide the overlay scoring technology. This is a player profile where we show different statistics that he played across different leagues. So we aggregate all the statistics and show it in his profile, and actually you can drill down by series, by different league, and you can track to any number of years back. So this is a video integration that we did for Liberty Cup that happened in Chicago for July 4th long weekend, where we streamed those games live and people can catch it in their TV and watch just like an international game. So these are some of the sports uniforms that we started selling this year, and you can see some of the teams are wearing our sports uniforms. So this is our company at a glance. We started in 2014, headquartered in Milwaukee, Wisconsin, and currently we have more than 3,000 leagues that use our platform across the world, and we have 500,000 active players using our platform from 28,000 teams. So far we have tracked more than 20 million balls, and we are having more than 60 million page views per year. In Alexa, we are ranked at 39,000, and within USA, we are ranked around at 8,000. So we believe we are number one in this space, where our distant competitor is ranked at 120,000.
So
and
Ganesh,
our platform is, yeah.
You are working with leagues in the US, in India, in England. Where are your active leagues?
So most of them are in USA. 80% of our leagues are from USA, and the remaining 20% are from around the world.
Okay, and these leagues are paying to use your platform?
Yes, we go by a premium model. We provide a website for free, but we have some premium features where they can pay and subscribe. So we have more than 10% of leagues who pay us to use those premium features. And we also sell jerseys and other things to those same leagues, and also provide video integration. So this is our geographic footprint, and majority of the leagues are from USA, and we have others in India, Middle East, and other parts.
So there are 3,000 cricket leagues in the US?
So there are about more than 2,500, I would say.
That's news to me. That's interesting, huh? Okay.
Yeah. Yeah, even ICC was surprised with that information, and we provided all the data to them, and they are going after that market now.
And then you've got them all. They're all on your platform.
Yes, yes.
Very interesting.
So 82% of USA cricket is using our platform. There is still 18% of market that is still out there that we need to capture.
Excellent. Okay.
So this is our target customers. Every league is can be our customer, and the teams use our website to manage their team, take the player availabilities, They can do all team-related management from our website, and players can follow the games. They can maintain their profiles, market their profiles, and all that. And fans follow the scores, and they can buy equipment or like uniforms from us. And publishers are right now we are using both Google ads, and also we have some advertisers that pay us to put their ads on different parts of the country.
Okay.
And this is just a Alexa ranking and how we are trending compared to our competitors, and also we show our customer acquisition graph. So this is the self-assessment test that we did from your website.
Very good.
So these are the points. So far we have bootstrapped ourselves, and now we are looking to raise some more, not a lot, but a little bit of funding to scale our development as well as marketing efforts in other countries where the cricket is the top sport, like in countries
Ganesh,
like India.
$250 million per year is your bottom-up TAM?
Yes.
Okay. You know, you have done a bottom-up TAM analysis, right?
Yes.
Okay. And what is your revenue currently?
So we are making about, this year we already crossed 100,000 revenue.
100,000.
Yeah.
And what is the business model? What do people pay? These leagues, how much are they paying?
So we have different revenue channels that we have identified and implemented. So one is the league management. The leagues can pay us to subscribe to premium features, or the teams or players. And other is the advertising channel. So we have Google ads and other advertisers advertise with us. That's another revenue channel. And e-commerce is also one of our biggest revenue channel, where we sell cricket equipment and all cricket related stuff to our customers who are already using our platform. And we have payment solutions that we are building up now that will be another revenue stream for us. And we also have some affiliate marketing that we are signing up
So if you look at the $100,000, what is the bulk of, or what is the biggest revenue source right now?
So far it's been e-commerce, but the e-commerce is based on the customers we have acquired, right? And also 2 of the national governing bodies signed up with us to implement this solution countrywide. So that will be our biggest revenue channel starting next year. We already signed the contract.
And
so
what countries are these?
They're going to, it's not public yet, so I'm not.
Can you send me a private message? I will not mention it. Can you send me a private message in the chat and tell me which countries it is, and I'll give you comments based on that. And give me an idea about what is the deal structure of that deal, of those deals, because I'm trying to gauge whether this is something, when investors look at this project, are we going to look at this as something that's repeatable?
Yeah.
So go to the chat and send to me personally, not to all participants, and type in just the name, the countries. Okay, got it. Got it.
Yeah.
So now, what is the structure of a national governing body signing up for something like this? What is the structure of the deal? So it's a revenue share partnership.
Yes.
And what kind of revenues do they get?
So it will be in millions or billions. It depends on the country that you are dealing with. So for a country like India, so just the IPL TV rights itself is sold for $1.5 billion. So it depends on the country that you're dealing with. For countries
but
like
IPL is an incredibly high-profile league, and they have their own systems and so forth. the kinds of countries that you are talking about are not, cricket is not as popular in those countries. They're much, people don't watch cricket, as much, right? So
that's where the ICC's focus is now, to improve cricket in these countries, to get the market in those countries.
So what is your revenue projection for next year based on the kinds of deals that you've done and what you're seeing in your, business model, e-commerce business model?
500 to 750,000 is our next year's projected revenue, and we are looking at 15 million revenue in next 5 years. That's very conservative.
15 million revenue in next 5 years is not interesting to investors. So VCs are looking to go from 0 to 100 million in 5 to 7 years. So if you tell them that we are going to go from 0 to or $250,000 or $100,000 to $15 million in the next 5 years, that's not interesting to them. So we need to work on how to package this story up so that investors are interested in what you're doing. Investors could be interested in what you're doing. And I need to look at your TAM analysis very carefully and give you very concrete feedback on how to, morph the TAM such that it can be of interest to investors, and how to, what kind of strategy will make you attractive to investors. So I'm happy to help you with all that. What I've seen so far is very encouraging. What you've done so far is very encouraging. And how long have you been in business, Ganesh?
2 years.
2 years. Okay, good. So you've done a nice job so far, and I think these deals, the 2 deals that you talk about, are very promising. So, if you want to, work with us, I'll be happy to help you figure this out.
Yeah, that would be great. And I have a couple more questions I can ask.
Please go ahead. Go ahead.
We have some advisors in our mind, and what would be the best engagement model with them? Like, do we want to have the advisors invest in our company, or just give the equity, or what would make them more motivated?
It depends on whether they're interested in investing, they can invest, they're willing to invest. If advisors are interested in investing, that's great. If they're not, then you have to bring them in with equity. I don't know who these advisors are, so again, I need to know concrete details to be able to advise you specifically.
Okay.
Including numbers, equity percentage, and all that. I will help you with that.
Yeah, sure. The next question I have is, what is your opinion on freemium model, where you provide free services to acquire users and offer premium services for a price?
I like free trial, not freemium. So yes, it's okay to bring in customers for free and let them use the product for or services for a period of time. That could be 30 days, that could be 90 days. You figured that out. What is the time required to show them value of your product or service, and then they need to start paying. Freemium, where they get to use something for unlimited time for free and never go to premium. This is the conversion rate for freemium is very low. It's 0.25% is average, or kind of more in the ballpark, or even less. If you can hit 1% premium conversion, free to premium conversion, that is considered good. And if you can hit 4% premium conversion, that is considered extraordinary. So with those numbers, it's very difficult to monetize a business. And the operational costs of running a freemium service is not insignificant. So I don't particularly like freemium models.
Yeah, that's good.
Okay.
And also, what is your opinion about angel investment versus venture capital, where in angel investment we can get money and run with our way, or get like a smart money where we get help and go in a different direction?
Oh, what I would recommend is, first and foremost, there is an issue with TAM. 250 million TAM usually is not the domain of the bigger VCs. So we have to find, there's a very small set of investors who are willing to do small TAM investments. The VCs are looking for, most VCs are looking for $1 billion plus TAM. So I really need to look at your TAM model very carefully and advise you on, is 250 million the maximum we can get to, or is that realistic, et cetera? So there's a whole issue around that. The other question is dumb money versus smart money. Angel money is not dumb money. Oftentimes, angel money is some of the smartest money out there because these are people who have done ventures themselves. There's a lot of dumb angel money, huge amounts of dumb angel money, which I recommend you do not take because that can make your life hell, absolutely. Because they have unrealistic expectations and they will demand Google scale returns, but you don't have a Google scale business. You have a smaller opportunity, but a good niche opportunity that you're doing a nice job, working through. So you need an investor that is, that corresponds with that set. But there are issues with, with a smaller TAM scenario, which is one of the things that we have to really closely look at.
We have excluded some of the revenue channels in the TAM to keep it to lower. Actually, if you include all the revenue channels that we have identified, it will be more than $1 billion.
Okay, well, start working those in, and let's, if you hang on, let me finish working with Auroshikha, and I can go to Q&A again. But I will explain to you how to use the 1M1M program, and if you decide to, work with 1M1M, then I will give you very, consistent weekly feedback on how to go about doing all the next steps.
Yeah, that would be great. Thank you.
All right. Auroshikha, you are up next. Are you on the call?
Hi, good morning. Can you hear me?
Yes, good morning. Go ahead.
Okay, so my name is Auroshikha Rath and my company is called Zydness, which primarily stands for Zumba, Yoga, Dance, and Jiu-Jitsu, which is modern mixed martial arts.
Something wrong with your line. It's not, your audio is not clear. Can you adjust your setup so that we can hear you?
I'm sorry, is it better now?
It is better, yeah. Go ahead.
Okay, so Zydness came from my expertise in Zumba, Yoga, Dance, Ninjutsu, which is modern mixed martial arts, exercises, sports and specials. Next slide.
Okay.
So my mission is to empower 1 million instructors find students no matter what, no matter where they are, just like how Airbnb can enable you to go live no matter where you are. And my vision is to motivate millennials to move more and find their passion in motion. Okay. As an instructor myself, I have had this personal pain point of finding the right class fit or taking my practice further, especially when I was traveling or even growing up staying in different states of India or parts of country for various number of years. And I would always have to start from the scratch. So that's a problem that I'm trying to solve. And now as a yoga instructor, I feel that the big problem is the client retention or the right fit. Less than 20% of the people are usually loyal and come back to the same class because there are so many options or we don't know where they fall off the pit. And then there is another thing as a lack of motivation because we cannot put a tab on our progress. Just like how Fitbit or any other device gives you a calorie counter or number of steps, we don't have any way to tabulate our progress in these disciplines that come under Zydness. So I was going on the market size. Yeah. So the TAM is 84 billion globally. That is the fitness revenue that comes from health clubs and fitness sector. Only from the health clubs and fitness center where not including the spa or anything else. And the sellable address market in the US alone is about 35 billion. And my target market is about 800 million, which is a top-down approach, but a bottom-up approach is about 1.2 billion, which is a revenue that comes only from yoga and Pilates studios. And according to my research, 80% of these fitness and health clubs are now focusing on boutique specialized studios. So they have a specialized offering.
Auroshikha, since we're on the TAM discussion, let me give you some feedback right off the bat. Your TAM or your target market is not, it's neither 800 million nor 1.2 billion, because you cannot take the studio revenue as your target market. Your bottom-up TAM is dependent on what is your revenue model. So what is the revenue model of this business, and if you project that out to the entire market, what is the total available market for based on that revenue model? That's what bottom-up TAM is.
Yeah, so bottom-up TAM was calculated by calculating the amount of dollars people spend on yoga and Pilates services.
Yeah, but that's not your TAM. What you're saying is you're going to do a marketplace like Uber and eBay and so forth of bringing these instructors together and matching them up with the right studios, correct?
Right.
So you are taking what is the revenue model? You're going to match up instructors with studios, and how do they pay? How do you define who's getting paid what?
Okay, so right now the revenue model is a marketplace model wherein the studio and the instructors subscribe on a monthly subscription fee to market their classes on my app.
And that's it?
Yeah, that's currently, that is the only one, but then there are a lot of other avenues that can be turned into revenue model.
So if it's a subscription revenue, it's basically the number of studios out there and the number of instructors out there times the subscription revenue. That is your total available market, not studio revenue. You're taking total studio revenue as your target market, but you're not getting that money. You're only getting the subscription revenue, and your TAM works off of the subscription revenue.
Right. So you think it should be number of studios or instructors into times
whatever subscription you're asking them to pay.
Okay. So this is the solution is a mobile marketplace which combines discovery and tracking of fitness by the hours. And right now I'm only it's at the beta stage, only figuring out the discovery. That's where I'm taking the monthly subscription from the studios. That's the revenue model. The basic listing is about $29 per month from instructors. Our competition, we have ClassPass and MindBody, which are a lot more higher price.
Hold on. Let's spend a moment here on your revenue and pricing model. So you have a two-tiered revenue listing fee, and this is whether it's instructors or studios both pay the same amount?
No, the basic listing fee is for the instructors, and the monthly subscription is for the studios, and customized metric is more detailed or customized reporting or added services to the studios or instructors. It could be anyone.
Okay, so your TAM is the total available. Is the number of instructors out there times $29 per month, and plus the number of studios out there that fall in your category times $49 per month, and then only a percentage of them are going to subscribe to all this customized metrics and stuff. So some percentage of that can be added to the TAM. That's your TAM, bottom-up TAM.
Okay, right. So the current competition in the market is almost like a monopoly. We have MindBody, which most of the studios and gyms and fitness clubs use, and they charge more than $100 monthly. And they give so many extra reports. It's hard for people to navigate through that because it's information overload. And then the other is this class pass from the user's perspective, which is just discovery, to fill the inventory of the existing studios, which doesn't necessarily give you the best classes. So Zydness, there's a space, since it's almost monopolized and there's so many competition coming up, so there's a space that can be niche and for especially targeting at the instructors of small specialized boutique studios that fall under Zydness discipline that can.
So Auroshikha, based on what you've said, I'm not understanding whether you are saying that there's a lot of competition, there's a lot of current players that you have to compete with, or are there just these three players?
Just these three players, but then I know a lot of other startups that are coming up. They haven't really found any ground yet, but they are specializing, let's say, just only cricket or just only soccer, and specializing only in one discipline. There are a lot of startups.
No, but that's fine. You're also going to be specializing in only a few disciplines, right? Dance and that kind of stuff, isn't it?
Mm-hmm. Yeah, more studio space oriented disciplines.
So of these, which ones directly compete with you?
ClassPass and MindBody. And all three,
and of the 80
Google
startups, nobody else has any competitive position vis-a-vis you?
Not really. No, they're still, I would say.
So none of them are horizontal solutions that are going to encroach into your territory, and none of them specifically focus on the category that vertical that you're focusing on.
They are, but I think they are in the same stage, or even
doesn't
lower.
Matter, they're competition. Same stage or not, they're competition.
Yeah, they're there. Yeah, they're there. But these are the
so
primary ones.
You need to bring them into your competitive analysis and do thorough competitive analysis on all of them.
Yeah, but they're like 2 months old. They're all, the other startups are all 2-3 months old. So I don't see any reason why I should spend time on them.
But because they're going to be competing for the same customers as you.
Yeah, but my primary competition.
So, for example, I'll give you why you need to worry about them. If you're doing, for example, Google PPC advertising, they're going to be competing and bidding up the same keywords that you're going to be bidding for. That's why you need to worry about them.
Right.
Okay, so let's go through your presentation. I'm giving you feedback as we go along, so let's keep going.
So the go-to-market strategy is by invite only, adding the first 50 partners, which I did in Delhi, adding 50 partners because I'm a part of the network. So getting them on board first, and then using referrals mode from the cell phone, from the mobile app itself, or the word of mouth, to get more partners and more users.
Okay.
This is the timeline so far, 10 years of problem analysis. I incorporated the brand and the trademark in India as an OPC. And then I went about a survey, which is still ongoing on my platform, in interviewing all the instructors, understanding the problems and their pain points, and partnered up. Even 20% of my partners paid me even before the prototype was ready, so that was quite encouraging. But by the time my prototype was ready, there were other funded companies who entered the market, who paid the market and bought the market. So that's when I think I felt really, because it's my company and I'm the only one. I thought it can be done, but when the funded companies came in, I found it really hard to survive, especially because the people who were paying me, they did not find any reason to pay as they were getting paid to be on the platform. So I took off my apps and website, and I've been working on it ever since, and I'm looking for a tech co-founder and an angel investor who can advise and give me mentorship and have the muscle power to stay in the market, enter the market.
So Unfortunately, angel investors don't do that. Angel investors fund companies that are significantly validated and are, look like they're going to go somewhere. So we need to find a strategy. We're, if you're interested in working with 1 million by 1 million, I definitely can give you the mentoring. But, I haven't looked at this, closely enough or in enough detail. So I can't say that this is a fundable company yet. So we have to work on it and see what is the right strategy forward. But whatever is the right strategy forward, we will be able to give you the mentoring on that. That's the best we can do. And if it is fundable, we will help you get funded as well. But I don't know. I can't yet say that this is fundable necessarily.
Well, ClassPass has raised about 155 million so far in Series C, and MindBody went IPO in 2011, but it's not profitable yet. And so,
those are already there. They're already there.
But they're still not serving the pain point that I'm trying to do. There is still no tracking metric.
So I'm not going to take at face value. Those are good comparables. It's good to have comparables that are success stories. So we can build a story around those comparables, but we need to look at, I need to look at your business at a lot more detail to see whether the differentiation that you're saying you're going to bring to the market, whether that's defensible or not, I'm not convinced yet. So it's very good news that there are a couple of good comparables in the market. That's good news. But it's also bad news because people are going to ask, okay, there are already major companies. What is the justification for you to come into the market this late in the game? What are you going to bring to the table that is going to be substantially different? If we can answer that question in a credible way, we can raise money. If we can't raise money. This is the reality of the situation. So if this is fundable, we can definitely get you to the point of, getting you in front of investors and all of that. But we have a lot of work to do before that. What you've presented here is not fundable.
Okay, so what do you want me to work on until then, or what would you?
If you wait, I'm going to explain to you how to use 1 million by 1 million, and you're going to, if you want to work with us, you're going to have to follow that, next phase of engagement with 1M1M, and we will basically follow you, step you through the methodology that we use with all entrepreneurs.
Okay. Thank you. Yeah.
You're welcome. So, all right, folks, I'm going to explain to you how to use 1M1M in a moment. But before we do that, I would like to also request you to do something for us. If you like what we do here, as you can see, we give very, very, very clear and honest feedback, candid, honest feedback that will help you move forward. And very, technical stuff, right? I can get into the details of your TAM analysis if necessary. I can get you to the details of your pricing model. I can get you into the details of your customer acquisition strategy. All of that is extremely detailed, extremely granular, and so forth, and extremely actionable. But you have to have the stomach for it, right? So if you're willing to work with that kind of granular, feedback and coaching and so forth, then 1 million by 1 million is the right program for you or for entrepreneurs in your network, whether it's friends or family or peers or whoever is trying to really learn and really refine their strategy and build a serious business. Those are the kinds of entrepreneurs we are looking for. And if you know people like that who are looking for help, please bring them in and we will be delighted to work with them and work with them through the program. So all resources are at 1mby1m.com. You will find a free blog which is chock full of case studies, trend analysis, mechanics, statistics, all sorts of things that will help you learn entrepreneurship, technology entrepreneurship. So definitely make use of that by following the blog. The Entrepreneur Journeys book series is out there on Amazon. It's there are 12 volumes of Entrepreneur Journeys books, and each of them focus on a particular area. So it could be billion-dollar unicorns if you're trying to build a unicorn company. It could be bootstrapping with a paycheck. You're just starting out and you want to keep your job, your day job, to pay the bills, and you want to start building your business on the side until you get to a point of validation where you think it's okay to leave the job and jump in with both feet. That's fine. We have a book on that. So each of these books, by the way, have 12 to 16 case studies that go into the details of how entrepreneurs have done it. So it's very much kind of simulates the experience actually of sitting down for an hour and having coffee with an entrepreneur, which is what I've done with each of these entrepreneurs. I've basically captured their entire journeys, and you get to access, 750 plus such journeys through the 1M1M program and learn from these very successful entrepreneurs. The roundtables, this kind of roundtables that you're part of today, happen every week, every Thursday. So until Thanksgiving for now, we have roundtables every Thursday. Our full acceleration program is 1M1M Premium. There you get extensive methodology guidance. There's an online curriculum that is very powerful and it's been in the market now since 2010. There is help with business development, help with strategy consulting, coaching, this kind of coaching that you've been getting today. The same kind of coaching you get extensively in the private roundtables, that is members only, and of course confidential. You also get help with financing. You get help with financing in terms of putting together what are the pieces that you need to become fundable, and then you get introduced to the investors, the right kinds of investors who fit your stage of the business, and that's the reality. You're going to have to fit the investors' requirements, otherwise you're not going to get funded. So you have to be fundable up to a point before investors are willing to even take meetings, and then you have to be in front of the right investors to actually get funded. So it's a very, very complex, very cumbersome game. Media relations, you're going to need to also, get social proof out there, so people need to be talking about you. You need some media coverage, and we have a lot of clout in the media. So we can get stuff written up about you so that people look at that as like, oh, here's an article about the company, and they're doing interesting things, there's social proof, etc. You saw one presenter today who did an excellent job of actually running his business through the 1M1M self-assessment, and we recommend that you all do that. That's a great checklist, and you will learn a lot and have a good perspective on how robust your strategy is by running your business through the 1M1M self-assessment. And if you have any methodology gaps in doing that, like you're not understanding terminology or something that you need to learn, just use 1M1M Basic, which is our curriculum-only option, where you can go to the modules that you need to learn, and you, on your own, very quickly, you can plug your methodology gaps. So dig around on the 1M1M website. There's tons of material, what to expect from the premium program, what to expect from the basic program, video FAQs, everything. There's a ton of description about the curriculum. As I said, the case studies of 750 plus successful entrepreneurs, including 50 plus unicorns, 400 plus venture funded companies, 300 plus bootstrap success stories. You have access to all that, and you basically get to stand on the shoulders of all these successful entrepreneurs using this platform, and that's incredibly effective. Our methodology is lean, capital efficient, bootstrap startups. Even if you raise money, you will have to get to certain levels of validation before people are willing to invest in you. And that's just the reality of how this market works. So focus on that, make sure that you are, getting enough validation done in a bootstrap mode and take it from there. You do have a lot of roundtables coming up all through November 2nd, 9th, 16th until Thanksgiving. You have 3 more roundtables. Make sure you register to pitch if you want slots in one of these roundtables to actually discuss your business. Of course, just by listening, you'll learn a lot. So do attend these roundtables. And that's, those are the online versions. And we also have now these monthly in-person rendezvous in Menlo Park. So if you are in Silicon Valley or if you're visiting Silicon Valley and these dates correspond with your travel, please come see me. We basically have been just hanging out and discussing people's issues once a month. And, we will probably increase the frequency of these rendezvous in due course. But for the moment, for the rest of this year, it's once a month. So there's one on November 9th, one on December 13th. And, interestingly, last week we had one. And there was a 1M1M Premium Program member at that rendezvous who found a potential customer, somebody who was bootstrapping a venture with a paycheck, but also he talked about, he listened to this, co-founder pair of what they're trying to do and said, oh, I have this problem in my company and I'd be willing to look at what you have. So, networking is always good. These are networking sessions, so you should introduce yourselves in the public chat here today, and also these kinds of in-person meetings are also great for networking. So we are ready for Q&A. You can ask as many questions as you would like in the public chat, and I will answer from there, or you can call in. The call-in numbers and instructions are on your screen. So just let us know who's calling in, follow the instructions. And also feel free to introduce yourselves in public chat. And while you're doing that, let me introduce you to Irina Patterson. Irina at 1Mby1M.com is her email. You can ask as many questions as you wish to Irina about the 1M1M program. Anybody, questions, comments? Questions, comments, introductions, folks? Lots of people in the room. I'd love to know who you are, what you're doing, what projects you're working on. How did you find out about 1 million by 1 million? Why you're here? What are you looking for? Monica Jones, former entrepreneur for 18 years, bootstrapped from 1 location tanning salon to 9 locations. Very good, Monica. Congratulations. Just recently sold and work at Oracle now. All right. And what do you do at Oracle, Monica? Financial analyst. All right. Very good. Anybody else? Any other questions, comments? If you're here from Oracle, by the way, there is an Oracle 1M1M intrapreneurship challenge going on right now, and the application deadline is coming up. So be sure to, submit your applications on time. If you have any questions, ask me, ask Susan at Oracle, Susan Hoffman. Mahesh Sharma from Bangalore also works at Oracle. Okay. Monica's next venture is in the coffee industry, and it's going to be a legacy for her family. All right. Jyotish Menon, session is really great with lots of insights. Great. I'm happy to hear that you found it useful, Jyotish. Also Oracle. So a lot of Oracle people, I bet that's because the application deadline is coming up. Anybody else? Monica Jones, first session, very insightful. Auroshikha Rath, thank you for the feedback. I look forward to your mentorship and make Zydness a household name. Excellent, Auroshikha. Good luck with that. Fahad Karyambat, I'm hardcore technologist working in Oracle into the banking domain. First time in a roundtable with great insight. All right, excellent. Sharma, that cricket project is really nice. ICC is pumping in money in a lot of countries to popularize cricket. Yes, that is correct. That is absolutely correct. Anybody else? Questions, comments? Feedback, introductions? All right, folks, if you don't see more questions, that's when we are going to adjourn, and we'll be back here next week, same time, same place. I hope to see many of you back here and also see more presentations. Talk to you soon. Bye, everybody. Thanks for coming.